You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's Friday. It's 1 p.m. Central, 2 p.m. Eastern. You know where volatility is. Let's find out together. My name is Mark Longo, and this is, of course, Volatility Views, the premier program for volatility traders. Pleased to have all of you joining us today, either live or after the fact. If you like what you're hearing, keep that deluge of reviews coming. We like to see them out there because it helps new people continue to discover the program and, indeed, the network in these crazy times. And, of course, if you have a question about vol, we understand a lot of people do these days. Hit us up. You know where to find us at Options, most of the major social media platforms. Our website, theoptionsinsider.com, works as well. Questions at theoptionsinsider.com. No shortage of ways for you guys to find us. You can ask them live if you're in the live chats. We bump you up to the top of the list there. No shortage of ways for you guys to reach out with your questions, your comments. We do love to hear from you guys. And let's see who else we're hearing from on the old show today. First off, let's go out to the land of the pit, where we are joined once again by the greasiest of meatballs, a.k.a. Cookie from the Wagon Train, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Greasy Meatball / Cookie, welcome back to the program, sir.
It's good to be here. I'm excited to talk some vol and talk some trading and talk maybe a little bit of UVXY, I have a feeling.
I don't know why you might think that. Oh, wait, perhaps I do, because holding down the hot seat, once again, our old friend, Mr. Dave Lincoln from VIX Crush Infamy. Mr. Lincoln, welcome back to the program, sir.
Thank you very much, Mark. I'm really excited to be here today and to talk to the fellas again. This is very exciting. All
right, it's very exciting. So without further ado, let's get right to it. Time for our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show where we do just that. We review the week that was and indeed still is from a vol trading and trending and analysis and unusual activity perspective. Kicking off the show here today, we're seeing, again, it's kind of like rinse and repeat, but yet another weird end to another weird week out there. You know, we saw kicking off the week, it seemed like everyone was in some joyous, optimistic spirits. We had some news about and rumors about vaccines potentially being effective. So all sorts of good things. Markets were rallying. Markets were joyous. And towards the middle of the week, it seems like that joy kind of ebbed a little bit. We started to see concerns weighing in about the growing impact of the pandemic. You know, areas like Florida starting to be overrun, hospitals filling up again. Kind of grim reminders of what we saw a few months ago. Areas like California going back into lockdown, and a lot of growing concerns around the country on that front. So that, of course, weighed on the indices, started to get a little top-heavy, and then, of course, we come into today, and we got kind of a weird mixed bag to end a weird mixed week, with most of the major indices feeling a little bit of a lift. The S&P and the NASDAQ up pretty much equal. The S&P just ticked up, so both up 0.24%, so almost up 0.25%. And we got the Dow, the laggard, rare laggard, off a little bit, off about a little more than 0.1%, about 0.16 out there. And our old friend VIX Cash kind of shrugging off the end of the week here, saying, you know what, we're just going to exhale a little bit and start again next week. Coming into showtime, it's a little bit shy of 26.25. That puts it down about 1.25 from where it was this time last show. Our old friend Spikes is exhaling even more aggressively. It's at about 25.25, which puts it down about 3.25 points from where it was this time last show. And then our old friend VVIX, a.k.a. the Vol of Vol, is actually up a little bit, which, if you pay attention to the space, makes a little bit of sense. You know, we have been seeing a little bit of movement from a vol perspective of late. That's up about 3 points. So still hovering right around that 115 level, just shy of that 120 barometer we like to throw around out there, which is, you know, hey, pay attention. But things are pretty frothy out there from an overall vol of vol perspective. All right, the table is set. Let's start eating. Let's start in the MIAX hot seat. Mr. Lincoln, sir, what's been lighting up your tape from a vol perspective this week?
Well, I mean, it's a crazy market out there, and I'm actually pretty shocked that we've come in so much on the VIX today, down 2 points. I did notice there was a buyer actually just recently, about less than an hour ago, on VXX bid for stuff. We've seen more of that trade where people kind of sell out of the money puts in the VIX to finance buying out of the money calls. I saw a few more of those went up. I like that a lot. But I am very cautious in this market. I'm not selling volatility. I'm bid for option premium. And the market, the NASDAQ is just a beast lately. And this market makes me nervous, and I'm not selling anything. So short vol show is on hold for the moment.
Just going to say, are you legally allowed to say that? I don't know if you're, as the short vol guy, if you're legally allowed to say you're not selling premium. I think that's analogous to our old buddy, Mr. Don Schlesinger. He used to say options should be sold or not sold. I think you're saying at the very least you should not sell them now, Dave. Is that what you're saying?
Yeah, lay off. Lay off.
We flipped to the not sell time out there in options land. But you're right. These are weird times. Vol's still elevated, but maybe perhaps not as juicy as you might like, given everything else that is lurking out there. So there you go. That should be an indicator in and of itself, listeners. The guy who hosts the Short Vol Show / VIX Crush is telling you, hold off on selling some options out there. Mr. Meatball, I turn our gaze towards you now. Do you concur with that sentiment? Are you as kind of concerned about what we're seeing today? Are you as surprised by the amount of quote-unquote VIX Crush, to borrow a phrase, that we're seeing out there today? And what else is catching your eye this week from a vol perspective?
Yeah, well, I would agree with our friend David that you don't want to be short vol, but I'm not so sure I hate being short vol. You know, something that's interesting is that the July future, which expires next Wednesday, is definitely pricing like we're going to be staying around here, like vol could drop a lot more. It's pricing in. It feels like we got some weekend effect and maybe some weird structural rolling stuff that can happen with VIX from time to time. But if you look at where the VIX is itself and where that August future is, which has about a month to go, they're now about 4 points apart, 3.5 points. That is the widest that I've seen a 1 month contango in, I don't know how long. October is trading at a almost 7 point premium to the VIX itself. So 90-day vol with that election obviously in there, is pricing in a just gigantic contango. So the markets are heavily insured right now the way they're pricing. They're not giving up the ghost. That's why you've got the VIX getting crushed, but not the VIX products getting crushed in the same way. So, could you talk me into a spread that lets me take advantage of the August future potentially heading toward 26 that's currently 29.5? I think you could. But I would not want to be like selling call spreads, things like that.
I think your son there agrees with your option selling premium. He's into it. He's into harvesting a little bit of the old vol premium. I always could tell he was a short vol man. I think when he grows up, he'll be listening to the short vol show / VIX Crush. We mentioned the futures. Let's get out to that side of the fence. Spikes futures obviously still halted. Hearing some whispers, some rumors that perhaps we may have some information on that front, hopefully in the near future. So hopefully that is indeed the case, and you guys can start slinging yourselves some Spikes futures. We had that brief period, that brief honeymoon where they were listed and you could trade them with the options, and all was right with the world. And then the regulators yanked them back, and then the world fell apart. So poor MIAX folks have not exactly had the best timing. Not of their own doing, of course, when it comes to all things regulatory on their side. But hopefully they can get their ducks in a row. The regulators can, at least. And we can get these products back so you can start trading them against the options out there. Looking at the VIX futures, obviously we're not exactly in backward town anymore, as Mr. Meatball kind of alluded to. That July future coming into showtime, it was a little bit north of a 0.5 point premium out there to the cash, about almost 0.75 of a point, and that AUG future getting a little bit farther away, about 3.25 points premium to the cash. And as you mentioned, coming into showtime, we see that AUG future had a nice bit of juice. I think, to use a technical term, it was at about 32.5. So pretty distant out there. This is what we've been talking about ever since, back to January, back before all this meltdown and this sell-off and this pandemic really began in earnest. We were kind of remarking and commenting on, man, there's a heck of a lot of juice out there around that election time frame. Maybe we might want to do something about that. I think we even commented back in January, you should sell that hard and sell that aggressively and maybe do some spreads that have a short leg around there. Then, of course, the world fell apart and other concerns took precedence out there. But it's still out there. It still persists, which is kind of fascinating given everything else we've seen over the past few months. They've literally thrown everything possible, almost, I think, at this point, at that. And yet the curve and that little bump out there, not that little anymore, it persists. Dave, what are your thoughts out there about that massive bump lurking around the election in the VIX futures, as well as anything else catching your eye in the VIX futures term structure out there this week, sir?
Well, yeah, I mean, this is a unique term structure with that peg out there by the election, which has been there, as you alluded to, for a long time. We get that thing a lot of times in the term structure where December is discounted. There's a little downward dimple in December because of the long cycle and the holidays. But having just this one event just dominate the term structure for such a long period of time, this is fairly unique. And I still don't know exactly how to play it. I definitely agree that there is some sort of arb there, but it seems like it might be sort of fairly priced right now. But as we start to get more of a disparity between the futures, there definitely may be something in there to do. But yeah, everything seems dominated by the political situation and current events right now, and it's reflected very much in the term structure.
Yeah, you're right, because early in the year, it seemed like a screaming sale, right? It was a no-brainer. Then everything fell apart, and vol blew up, and other concerns took precedence. And now we're kind of back, and vol is still juicy, I think, to say the least. And yet that part of the term structure is once again glaring in just how just aggressively bid it is out there. Mark, you kind of alluded to earlier, you may be talked into some time spreads around that. Have you considered to put anything on around that whole VIX election bump, sir?
Yeah, this is one that we've looked at pretty extensively, and I do think it's an interesting in-the-money short put spread where, maybe you buy the October 40 put and sell the November 40 put and pick up a nice credit on something like that. Do it on a little bit of a ratio so that you get a little bit extra November behind that. I think that personally, I think October is way overpriced. It's hands down. If you think that we're going to see some volatility normalization over the next few months, it is definitely going to see some pressure. So I think that's absolutely and working from home's a joy, isn't it, folks?
Yes.
I just think that some sort of short time spread using puts are a really interesting way of taking advantage of that crazy term structure and trying to take advantage of that term structure. That'd probably be the way I would approach it and have approached it.
There you go. Again, I think your son concurs with you out there. Let's move on out to VIX land. Valentino, who knew he was such a fan of VIX term structure spreads out there? Interesting stuff. Start him early there in the Sebastian household. Moving on out to the option side of the vol fence out here. Spikes option, like we mentioned, still kind of waiting for those futures. So the OI still pretty much similar to last week. Top positions out there, the July 24s, number one, then the July pars. Still lingering out there. I love that. Always brings a smile to my face, which is rare these days, so it's kind of nice to have that. July pars, number two, and then number three, rounding out the top there, are the D's 28s. Interesting selections out there. Again, people waiting for the futures out there. Folks seem like they were waiting, keeping their powder dry in VIX, at least until today. Coming into today, that ADV was down precipitously from our last show out there in VIX options land. It's down about 314,000. That's where it is right now. That's down not quite 100K, but pretty close to it from our last show. It's around 404,000 or so last show. So down about 90,000 contracts. So that's a pretty big hit. Again, this is usually a seasonally quiet time. Mid-July, heading into the kind of teeth of summer, is usually a quiet period from a vol perspective. But this is nothing like a usual year. There's nothing usual about anything we've done so far this year, anything that's happened from a global perspective out here. So it wouldn't surprise anyone, I think, to see VIX kind of popping up. And we're seeing VIX getting a little bit of a lift today, at least from an overall volume perspective, at about 352,000 contracts as of a few minutes ago. So blowing past that ADV today. Looks like they're on track for a little bit of paper out there. We'll see how that progresses as the show and indeed the day goes. Let's break down the top 10 hot positions out here in VIX land. Only cost you 83,000 contracts to break into the top 10, kind of a bit of a sign of maybe how much that ADV has fallen off a bit of late. That gets you all the way to the July pars, that infamous trade that Bloomberg really got super excited about back in the day when all this first started popping off. There's still a bunch out to the tune of almost 84,000 contracts open on that strike. So a lot of folks playing on that July par strike out there. Number 9, about 86,000 of the July 50s. A nice 50 par vertical, huh? What do you think? Number 8, 106,000 of the July 20 puts. Number 7, 109,000 of the July 28 puts. Number 6, $1.11 of the July 30 puts. Then also $1.11, about 100 more than number 6 here. For number 5, the July 35 calls. And then 114,000 for number 4, the July 32 halves. Numero trace here, $1.20 of the July 28 calls. Number 2 here, 121,000 of the July 25 puts. And round out the top 10 here, the biggest open position in VIX right now, AUG 60 calls, 123,000 contracts out here. Looks like pretty much it's not quite 50-50. It's 60-40 calls to puts out here, listeners, in the top 10. So read into that as an indicator what you will. About 6.75 million contracts open, about 3.6 million on the calls, and about 3.15 million on the puts. Let's head on out to what action we're seeing out here in VIX options this week. Today, one of the busier days we've seen, like I mentioned, 352,000 contracts on the tape as of a few minutes ago, with the big prints today coming on the AUG 24 puts, 41,000 of those bad boys, and the AUG 27 puts, 20,000. Maybe a bit of a 1x2. Going up out there, also 20,000 of the DEES 50 calls and 20,000 of the AUG 21 puts. So a lot of front month puts as well as a little bit of DEES in the mix out there today. Yesterday, a little bit lighter volume, 298,000 contracts on the tape. Big prints, 22,000 of the July 23 puts, 19,000 of the July 26 puts, and about 15K of the AUG 23 puts. Pretty much a put strip there for most of the top prints out there. Yesterday, Wednesday, even lighter volume, a little bit north of 250,000 contracts, 261,000 to be precise. The big print, 30,000 of the July 70 calls. Interesting strike selection out there. And then 16,000 of the July 35 calls, and 15,000 of the AUG 23 puts. Tuesday, a little bit more volume, 274,000 contracts on the tape. The big prints, July 30 puts, 21,000, 20,000 of the July 27 puts. Perhaps a bit of some vertical action out there, as well as our old friend, the par strike, coming back, this time in August. The AUG par calls, 12,000 those bad boys trading on Monday, as well as 11, almost 12,000 of the AUG 40 calls. So I was joking about the 50 par. Maybe you want 40 par vertical out there. And then Monday looks like it's pretty much tied with almost exactly with where we are right now today from a volume perspective. About 357,000 contracts on the tape. On Monday, the big prints, the July 25 puts, 17,000 and change, and the July 26 puts, maybe a bit of a roll, bit of a vertical, pretty tight one if that's the case. 15,000 contracts there, 14,000 of the AUG 70 calls. Our favorite strike, one of them at least, raising its head up there again, and 14,000 of the July 35 calls. Dave, we'll start with you. Anything interesting catching your eye out there this week from a VIX options activity perspective, sir?
Yeah, well, as I said before, we've seen a lot of people kind of selling downside to buy upside. And I think some bloggers and stuff have been recommending that trade. And I think that is a good trade. It seems fairly safe to sell some way downside in the VIX here and use that either to put in your pocket or just to finance some sort of upside trade. So I like that. As I said, I think this market has another down move in it. So I'm very cautious about selling too much upside here.
Interesting stuff. I think Valentino wants to share as well, Mr. Meatball. So what are his favorite strikes and what options trades caught his eye this week, sir?
Yeah, I got to say, I was listening to you go over the top 10, and I was just flabbergasted at how low the open interest is on those strikes. Given, you used to have $250,000 just to get into the top, 15. And now, it's, maybe 100,000. And so it's been fascinating the amount of volume drop off that we've seen in across those strikes. The thing that really catches my eye is how we still have just a crazy out of the money skew on calls. To Dave's point, so I like what he was throwing out and kind of selling some downside, and then either buying upside, but even more interesting might be buying like an upside call spread versus a short put, or a short put spread. At some point the floor is going to fall out of this VIX index. I do feel like, if we get a sell off, it's going to be a little different than some of the other ones where we have where, I still think there's a 30 or 40 point down day in Apple coming where a lot of money comes out. But that my feeling, Dave, is that that's going to go into stuff like railroads and financials and things like that. So we might have a day with positive market breadth where we're kind of red and vol might be in. I would not be surprised if we had some days of red S&P and red VIX that we've kind of have seen a couple times this week. I think there is, some of that upside that is crazy bid, those AUG 100s, the AUG 90s, there's an opportunity to sell those to finance any kind of call you want. The 60-90 call spread is what, 40 cents? That's not very expensive. The 50-100 is barely a buck. There's a lot of opportunity to put on some upside hedges. So if you're listening to Dave and going, Dave's a smart guy. I don't know who would say that, but let's just say that this person existed. Kidding, Dave. I'm kidding. I think that the crazy upside bids have produced some real opportunities to set up some spread opportunities. And I love Dave's idea of selling some downside puts. I was noticing the August 24 puts are 85 cents, 90 cents. That's some pretty juicy premium for a level that we have not traded at since early February.
Yeah, you and I have joked before about the stubborn bid on that par strike, and it persists. You're right. So if they're going to give it to you, you might as well put it to work. And when we joke about why sell that par, but in VIX it makes a certain amount of sense given what we've seen out there of late. If they're going to give it to you and help you finance a much more attractive, much closer to the money call position as a result, and you get a nice little vertical out of it for an attractive price, who are we to judge? Who are we to mock? Well, actually, that's exactly what our job is here. It is to judge. But we do it with kindly. and with support and optimism. I don't know how much support there is out there for VXX right now. It continues to move to the downside. So at least from a price perspective, not a lot of support, which I'm sure a lot of the traders out there have a smile on their face. Looking at the top positions out here, that seems to be the case. Coming into the halfway point of the show here, we're seeing VXX breaking the 31 handle, getting down about 30.90 or so. So shy of the 31 handle, puts it down almost exactly 1 3/4 points from where it was this time last show out there. It was doing a fair amount of paper out there today. Let's see if that's still the case. Yeah, about 160,000 contracts on the tape as of a few minutes ago. That's closing in on the ADV, which is about almost 200K, 199 to be precise out there. The big trades today are about 11,000, almost 12,000 of the July 31 puts, and about 10,000 of the AUG 32 calls and 10,000 of the AUG 28s as well. So maybe a little bit interesting vertical out there. But if you're looking for call action in VXX, don't look at the top 10 because there's not nary a call to be found. We got one. We'll play a little Where's Waldo. Where's the call to be found in the top 10 of VXX? Number 10 out here, 16,000 of the July. Thinking VIX. Jan, 20 puts actually. And then number 9, 16,200 of the July 25 puts. Mostly July out here. And then we got number 8. Oh, I think we found it. There's our Waldo here, 16,300. Funny how those all stack up on top of each other there. Of the Jan 25 calls, the first and only call in the VXX top 10 out there. Read into that what you will. Number 7, 17,000 of the July 30 puts. Number 6, 20K almost even of the Jan 22 puts. We go back to July and Jan quite a bit. Say that 5 times fast, listeners. Number 5, back to July. July 23 puts for 23,000. Number 5. Number 4, 26, almost 27,000 of the July 21 puts. Number 3 here, 32, almost 33,000 of the July 35 puts. And then number 2 and number 1, you know what's up there. It's that AUG 30-22 put spread we talked about a little while ago, about 105,000 open on both of those strikes out there. And our friend who rolled from the July 35 puts down to this put spread, he's starting to have a smile on his face again. For a while there, he was looking a little dicey. It was running back away from him, and it seemed like his put spread would perhaps fare not as well as he thought. He did all right in his last one. He has done previously. This guy's been rolling for a while. His previous rolls have done pretty well. The July 35 put's not his best, but he still did all right on those. We'll see if this put spread pays off. Total of about 1 3/4 million contracts open in VXX right now. About 1.1 million on the puts and about 650K on the calls. Again, one call to be found in the top 10 of VXX land. Dave, I know you like to play in a lot of the vol ETPs. We'll get to your funky, neutered inverse and ratios in a second out here, but let's start in VXX land. What's your thoughts on what we've been seeing out here in VXX and the fair amount of erosion we've seen coming into today, sir?
Yeah, so I did notice on the tape there was a out of the money August call buyer. And yeah, it has come in. Now, you know, we've been in this elevated volatility range for a long time now. So taking a few points out of it should not be all that surprising to anybody. It's just, I guess, for me, in my mind, watching the NASDAQ rip all over the place, it is surprising it's come down so much. But just a reminder to people that skew that Mark S. was talking about, in the VIX, it also exists in VXX. So it's not a bad trade. You're actually kind of starting with edge if you were to like buy an at the money call and sell a slightly out of the money call as a way to kind of catch a little long. When you get a day that VXX is way down, you might just buy some at-the-money calls and look to leg into a nice call spread because that skew is very pronounced still, and all of these call spreads are discounted. So for me, when we get a big down day in vol, I like to maybe scoop a little call spread. I'm a premium guy now, so that's my play.
You have to change the name of your show here. Scoop and Vol, the Scoop and Vol show with Dave out here. Vol Scoop, how about that? Vol Scoop. Maybe so a couple of days a week you do the short Vol, other days of the week you do Vol Scoop. What do you think, huh? You get both sides covered, then everyone's going to love you and or hate you in equal measure, which will be certainly fun.
Exactly.
Certainly fun for you out there. Vol Scoop TM, we're going to brand that right now here on the show. Mr. Meatball, what are your crazies up to? What does Valentino think about the VXX erosion out here, and what's catching your eye out here in everyone's favorite vol ETP to fade, sir?
Yeah, I was thinking, Mark, going forward, we should play the game Where's Caldo, where we try and guess what ranking the VXX call will be that first hits
I'm down
the
for that.
10.
Next week, where's Caldo? I'm down for that. I like it.
Where's Caldo? And we can do. I gotta say, we've been a trade that I set up for in a webinar that I did this week. I put on the July 24, 32, 30, 28 put fly. I like that one a lot. And then in our Volatility Edge product, I put on a very similar product in the VIX index itself. I think that there is significant downside pressure on VXX here. So, plays we like to, if you want to play Dave and Mark at the same time, you could talk me into a VXX straddle and then selling it out of the money call against it. I think that there's a lot of money in. I think that's a trade where you could have your cake and eat it too, in that you take advantage of upside and are actually hopefully getting some carry and rent out of those puts.
I don't think Valentino's a fan of that one.
He didn't like. He
did not like that trade at all. He's going to talk you off the ledge. Like, Dad, what are you doing?
Children, folks, children.
The skew is not at all favorable to that position, Father. Why are you recommending that trade? I find that deeply irresponsible. I think if I could translate for him, that's exactly what he was saying. I like that out there. Where's Caldo? You may have to look to that in future episodes, listeners. Meanwhile, let's look to a little bit of... actually, before we get to single name, I'd be depriving our friend of VIX Crush / now VIX Scoop, his forthcoming VIX Scoop show. He loves to hang his hat. I always joke, who's still out there trading, SVXY and UVXY? And here he is. He's literally the last of the Mohegans. Of course, I think there's a few more Mohegans now that TVIX is going the way of the dodo. Dave, what's been lighting up your tape out there in UVXY and SVXY this week, sir?
Well, first of all, I've gotten continuing inundated with TVIX people. So TVIX public service announcement, the symbol in OTC is TVIXF, and it still is trading decent volume. I just looked. It's trading about 150,000 shares a day. But I would recommend, if you're in TVIX, to get out of your position, as I've been saying all along. But UVXY has been the beneficiary of this. I know the size of UVXY has swelled a decent amount. I'm not sure the exact stat, but it has grown in size. It might have almost doubled in size now as the people move over from TVIX. So I guess from a business standpoint for pro shares, it's alive and well and not going anywhere. But yeah, I've been buying call spreads when we get a down move. Either that or like in the overnight, I've been buying a couple shares and then hedging it in the morning with some out of the money call, this sort of thing. But same kind of deal as VXX in that I don't mind owning premium one way or the other, even if it's just a back spread is the same as a call spread, in that this stuff seems like it has a chance to get up and move around both ways. So.
Yeah, I'm looking at the numbers here for UVXY right now, and you're right, they do seem to be ticking up a little bit. The ADV's at about 66,000 right now, and so far 55,000 already on the tape. So perhaps the lingering death of TVIX, which you're right, does live on in this weird kind of ghostly OTC spectral form. But it does seem to be giving a new shot in the arm to UVXY out there and all of its ilk, including SVXY. I've often maligned those ever since they got neutered mid-contract, which still just leaves a bad taste in my mouth out there. But still, these are quite literally the last of the Mohegans out there right now. So if you want to play in that former TVIX kind of game, sounds like a lot of you do. And hey, they're optionable. Yeah, I know they're neutered. They're not quite what they once were. But still, it's that or nothing. So if you want to play in this out here, it sounds like a few of you are out there. Tell you what, Dave, just for you, just because you're on the show here today, we're going to break down a top 10 positions here in UVXY. I can't remember quite literally the last time that we did anything like this. So this will be a fun one out here. Let's see if I can get my rankings ready here in time. Maybe I looked before I leapt out here. All right, here we go. Now we're on the fly. All right, number 10 out here. In EVXY, that's an interesting one per se. UVXY land are about 3,400. So obviously we're talking a little bit less paper here, listeners. than VIX or even VXX. The total OI right now is 387,000 contracts, 232,000 on the calls, 155,000 on the puts. Number 10, about 3,500 of the June 1 puts. What are these? Oh, 2022. Oh, these are June 2022 1 puts. 3,500 of those bad boys. Number 9, 3,500 as well of the July 50s. Number 8, about 3,800 of the July 60 calls. Number 7, 4,100 of the Jan 5 puts. Then we're back to 4,176 of the July 40 calls. Then number 5, 4,200 of the July 35s. Number 4, about 4,900 of the July 50s. Numero trace here, 5,500 of the SEP 25 calls. Number 2 here, 6,200 of the Jan 5 puts. And number 1 with a bullet out there right now in UVXY land, the 12,000 of the Jan. Hard to do July and Jan all in the same list. The Jan 10 puts out here with 12,000 of these bad boys open. By the way, I didn't even quote it at the top of the show. UVXY is at a 28.25, so pretty much all of these positions, aside for the 25s, are pretty far away from the money. Does that surprise you, Dave, that these are the top positions in UVXY right now, these kind of funky, esoteric strikes, sir?
It sounds so minuscule to paper. I was when I was talking to you before, I was kind of referring to the fact that people actually, the shares, like there's more ETF trading, but obviously there's not a whole lot of paper going on here at all. And it doesn't surprise me. It's very hard to trade. It's not very liquid. The bid-ask spread is very wide, and it's not a fun one if you're a new person to get into because it's just all over the place.
This is actually one of my favorite products to trade from the option side. It takes work. You're right. It's not an easy layup. But if you, a lot of the really long dated stuff, I don't think is priced very well. And you can put yourself in a position to put on some relatively inexpensive, bearish butterflies is probably my favorite trade. So a trade that we put out and closed, a few weeks back, we had done the 32-20-10 put fly in September, and then when it got to 28-29 the last time, I think middle of last week, we took it off at a nice profit, and then when it popped back up, we looked at a very similar trade. There's some of those mid-tier markets where people aren't sure whether it will get there or not, can be where volatility is really juicy, and people love buying like those 20 puts because they're calculating how much could UVXY lose over so much? And then they fail to see the forest through the trees and realize that, hey, if you like that, what you should do is sell the 20s and buy the 30s or the 32s. And you actually have a spread on that's got some pretty nice R&R, risk reward. Big fan of UVXY.
Dave, you can admit it to us. It's okay. That 3,500 lot of the June 2022 one puts, that's you, right? That has short vol written all over it, right?
Well, I'm nodding my head in approval through the radio here at Mark. In SVXY, the same thing. There are butterflies, the call flies that you can put on, and you just dangle a bid way below the market, and for some reason you start to get filled on these call flies. I was working the 50-70, or I think it was like the 50-70-90 call fly out in January. Now, it doesn't look like it's going to get there now, but these things are very cheap in SVXY. The problem is you just have to be prepared to stick out the illiquidity of it. And, it's not stuff you're going to get in and out of all the time.
Yeah, if you're used to a nice, deep, and liquid VIX or even VXX on the options front, a little bit more challenging these days out there in UVXY. You got to sing for your supper out there a little bit, but if you're okay with that, and you're a former TVIX aficionado, and you like it to be optionable this time, maybe you don't really have many other choices, let me put it that way, until some of these new products are approved. It's kind of UVXY or nothing out there. Let's see here. Let's move on out to single name vol, because a lot of that is popping off these days. We are back amongst it. It is earnings season yet again here. Listeners, popping off on Monday with Pepsi. Tuesday, the financials kicking off with JP Morgan, Wells Fargo. Wednesday, Goldman and PNC, and Alcoa sneaking in there as well. Kind of an old school reminder of old cool aluminum as the Brits like to say. Thursday, Abbott Labs, Bank of America, Domino's Pizza blowing the freaking doors off, I think to put it mildly. Johnson & Johnson, Morgan Stanley, and the Widowmaker Netflix. Not so much for them out here right now. And then Friday, today, BlackRock, our friends over there at Ally of Options Playbook Radio fame and Citizens Bank as well. We got the earnings move reports on all these bad boys, earnings results reports coming in pretty soon. You can check them all out over there at theoptionsinsider.com. Let's start with everyone's favorite. We got the earnings move report. We'll get the results report in a little bit out here. For the Widowmaker, Netflix, they were popping off yesterday after the bell. At the time of this report, they were trading $523.25. The straddle was pricing in about $50.50, and that's pretty juicy because in the past they've moved about $30.25. And right now they're off. They're about $492.75 out there in the after hours. They're off about $35 from where they closed. So maybe that past move was correct. Maybe the intraday or that overjuice on the straddle. I don't know how low they got in the after hours here. I'll have to look and see. So maybe through that movement you could have made it back, but maybe $50 was too rich because folks were crushing Netflix. But it seems like it's kind of bottomed out here now around this $490 or so level. Got down to $485. That isn't that bad. So yeah, that $50 straddle. Maybe it was a bridge too far out there. Let's see our friends out there in Ally, what they were pricing in. About $22 was where the stock was. Time of this report, they're pricing in $1.40. In the past, they've moved about 80 cents. So almost 2x there on the vol perspective. Snap popping off next week, the 21st. They were at 24.5. They were pricing in $3.16. In the past, they've moved about $4.50. So a little bit of underpricing vol out there in Snap land out here. Let's see what else. We got so many tickers out here to parse, listeners. Microsoft, perennial top fiver, if not top three, are out there these days from an options volume perspective. It was at 208, pretty much even time of this report. Look at this. They're pricing in $11.70 on that straddle, listeners. In the past, they've moved $4.88. So closing in on 3x there from an overall straddle perspective. Wow, that's pretty juicy. Microsoft was, I've said it before, for pretty much a decade. It was a lost decade in the stock, and it was one of the most reliable premium rights in the business. You didn't get a ton for it because it didn't move that much, but you kept most of what you got. These days, it's a different ball game completely out there as this straddle is reflecting out here. Let's look at a few others out here really quickly. Twitter, they were at $35.67 time of this report. They were pricing in $3.82, a rare underpricing of vol because in the past they've moved about $4.80 out here. So light vol. Let's go out to airlines here. Love, aka Southwest. They were priced. We'll see. They were at, from a stock perspective here, $35.75. In the past, they've moved $1.35. Right now, they're pricing in $2.13. So a little bit of juice. I don't think that surprises anybody. Airlines having a little bit of problems of late out here. We saw American and JetBlue joining forces there yesterday. So I think the American CEO kind of coming out and almost like swearing at the public, like, come on, let's go get flying. So clearly the airline industry in a bit of turmoil, and they're pricing that in from a vol perspective. Let's go out to my old stomping grounds out here really quickly as well before we get some of you on the show here. Intel, 59, pretty much even at the time of this report. In the past, they've moved $3.12, and now they're pricing in $2.94. So a little bit light from a vol perspective. Intel looking fairly priced. Let's see if you guys are fair in your opinions. It is time to check in on your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, welcome to the vol voicemail. Before we get to your important vol topics of the day, Mr. Meatball, I'm not sure if you were around on the option block. Actually, you weren't yesterday for the payoff to our great debate of earlier this week on the option block, where you posited that the iconic Burt Reynolds film known as Smokey and the Bandit is indeed a modern Western. I took the opposing view, I think, to put it mildly, but we left it up to our audience to decide. And despite your attempt at a little bit of gerrymandering here by voting for yourself there, we said, is it a Western, yes or no? In the end, the genius of our audience shone through. 77.8% coming out saying no. Only 22%, including you, Mr. Meatball, chimed in on your front. So what do you have to say for that, sir? The audience has spoken.
I would say that it's good to know that 23% of our listeners are intelligent.
How many times did Valentino vote in that poll, sir? That's what I want
He
to know.
voted at least once or twice. His Twitter handle is blonde bombshell cutie 3 years old at Cubs fan.
There
That's
you go.
his Twitter handle.
I like it. But ironically, as we're starting the show here today, we got an interesting list. You and I were talking about great Westerns. And we got an interesting list right before the show. I don't know why this came in, but it was Westerns you need to watch before you die. Maybe someone listened to the show. I think this comes from Looper. They hit a lot of the ones we mentioned already. I said those Clint Eastwood spaghetti Westerns. They topped the list with Good, the Bad, and the Ugly. That's one of those. Your favorite is number 2 there, Butch Cassidy and the Sundance Kid. Then they have number 3, Tombstone, which they also ironically describe the same way you did as the career-defining performance for Val Kilmer. So maybe this is your list. Maybe I don't know who put this together. Then number 4, they have Once Upon a Time in the West. Then number 5, The Searchers, that old James Bond, that old John Wayne vehicle out there. Then number 6, The Assassination of Jesse James by the coward Robert Ford. I never saw that. I heard bad things. Maybe I need to revisit that. Then number 7, The Wild Bunch. Number 8, Unforgiven, the one I've said as well. And then number 9, Stagecoach. An early, that's the roots of the genre back in 1939. And number 10 is High Noon out there, 1952, that old, I believe it's Gary Cooper kind of standout. So what do you think of that list, Mr. Meatball?
It's a pretty nice list, I got to say. I think that they hit on a bunch of them. A little disappointed that he put some of the musicals in there, like Oklahoma or some ones like that. But, by and large, I think the lone shunning was clearly The Quick and the Dead. Which is of Sharon Stone, Leonardo DiCaprio, and Gene Hackman fame.
Oh, that's right. Leonardo DiCaprio was in that one, too. Oh, wow.
Yeah. It's before he got super famous.
Dave, you have to weigh in on this most important topic of our day before we get to the listener question really quickly. Is Smoking the Bandit a Western, yay or nay, sir? What do you say?
I'm actually on the side of Mr. Sebastian on this.
Oh, I'm sorry. What's that? The mute button somehow fired up there. I don't know how that happened. You, Valentino, and the Greasy Meatball all lining up together here against me. All right, I know who my friends are. I know how it all lines up out here. Luckily, the audience, a.k.a. the smart folks, are on my side of that debate. Speaking of the smart folks, let's get to them out there. A lot of folks listening live right now. Let's see, Seth Golden chiming in. We were talking earlier, Mr. Meatball, you said there's an interesting opportunity to sell crazy upside in VIX in order to finance some verticals like our old friends, the 50 par and the 70 par. He chimed in with a lot of luggage. A lot of luggage. He said that twice. I'm not quite sure what that means. Seth, if you want to clarify that, maybe you're not a fan there of using the verticals to sell the upside. I'm assuming that's what that means. And then we were talking about UVXY, if it's the time to dive in. We were just chatting about that earlier. Ray Shore chiming in says, can you automatically start the program? I don't want to miss it. Well, it's going on right now, so you should be hopefully listening to it live right now, Ray. If you're not, check out that Mixer link that we've been tweeting out throughout the show. You can listen to it live right now. Of course, you can always get it after the fact. That's the way most of you get it on the podcast network there. But either way, interesting stuff. Mr. Meatball, our frequent listener here, Scott Sommer, frequent chimer in, he apparently is very concerned, keeping on our Western and Texas theme, about you moving to Texas. That's how all this got started. The Meatball is moving to Texas here. He's been tweeting nonstop pretty much all week, every dire thing he could think about Texas. He sent this thing out a little while ago, 19 hours ago. Texas shut down to be announced tomorrow. He's tweeting out a lot of temperature warnings about how hot it is in Austin. And also he liked the thing you put out about that weird bug. So I guess our audience, Mr. Meatball, is concerned about you moving to the furnace known as Austin, sir.
I'll be fine. It's just that 2.5-inch stag beetle was more than I needed living in Chicago.
Yeah, what the hell was that? That was insane.
It was a stag beetle. It was the scariest thing I've ever seen. And, we don't, and the problem was the winter was so mild that it didn't kill them off. So we've got some giant, huge stag beetles walking around going, pinch, pinch, pinch. And I said, I'm all set for moving there for Texas tarantulas and rattlers and you name it. But one of the nice things about winter is it's supposed to kill off all those giant bugs so that we only get like the teeny tiny little annoying bugs and no 2-3-inch bugs.
I think it's about the size of Valentino. Watch out for him with all those things going
huge.
around.
And Lauren and I were up. We were like, oh my gosh, we literally woke up our 10-year-old out of bed and made him look at it.
as you're supposed to do when you encounter something creepy and or off-putting like that. All right, let's get to some of your real vol concerns out here. Maxis wants to know, why does so much of the volatility world revolve around IV30? Why has that emerged as the vernacular of the volatility trading community? So many equations and products all feature this. Why not a longer time horizon or maybe factoring around historical volatility? How did this become the lingua franca for volatility? I love our audience. So savvy, so sophisticated out there. That's a good question, Maxis. I think it really depends, quite literally in this case, on your frame of reference. I think IV30 has become the vernacular, partly because it's kind of what VIX is based around. VIX is kind of geared around that 30-day vol perspective. Also, a lot of vol traders are very near-dated. They're trading in and around that front month mostly, if not in the week. So 30 is actually maybe a little long for a lot of them. Maybe that's why we're starting to see the rise of a lot of other metrics. You see IV20. You're seeing a realized vol. We talk about a lot of realized vol here on this show. That's always a nugget you need to use in your volatility arsenal. You need to be able to compare IV to the realized so you know how much risk premium is baked in there. But it's an interesting thought question. Mr. Dave, what do you have to say here for our listener, Mr. Maxis? He wants to know, why is IV30 the lingua franca of the volatility trading world, sir?
Well, I mean, I think you hit it on the head. The VIX formula is based on 30 days out. And, we have futures expire once a month. So kind of makes sense in a number of reasons. Obviously, you can look at stuff farther out. And I actually often do. I'll pull up my SPX option screens and look and see, okay, well, is 20 days higher or lower than the 30-day or the 50-day? But I think it's just kind of baked into the formula, and also due to the fact that futures expire every month. It sort of makes sense along those lines.
Does Valentino concur, Mr. Meatball? Does he like that agreement or that definition?
So let's parse this out in a few ways, because this is actually a really good question. So let's start with options volume as a whole. When I was on the floor, and it's still this way, 80% of the volume that takes place in equities, in indexes, you name it, is that front month option, and now the weeklies around it. And so, the reason why we concentrate partially on IV30 is because IV30 really represents where the lion's share of all volume is taking place within IV30. The second month is probably has the second most activity, and between those, you look at IV30, you got a pretty good gauge on where almost all option activity is taking place. Sans that's listed, sans maybe the SPX and some of the other things. Now, two, let's talk about why they invented the VIX in the first place, and VIX really is representative of a variance swap, and it is essentially, dumbed down a little bit, but it's essentially the cost for a 30-day variance swap. And the reason why they put the VIX together was, for the longest period of time, most customers hedged using variance swaps, and normally, and a variance swap is where you trade a realized volatility, and then if the realized volatility is above that, you get paid out. And if it's below that, you pay out. And, when those trade, most of the time, customers come back to close them. But every now and then, there are customers that don't close it. And so the big houses, and that final 30 days is where there is so much risk with variance swaps, because in the final couple of days, you can really, really move the final volatility number. It would astound you how a couple of days of high vol at the final couple of days of trading can affect the final price of a variance swap. So the customers would not come back. There were customers that would come back and ride them out, that wouldn't come back to close. And Goldman and Merrill and all these big banks and UBS and Citigroup, whoever, that was trading these over the counter, and really it's about four players, they wanted a listed product where they would be able to dump off their variance risk. And that's really what got the VIX started as a product. What's made the VIX so successful was that it started as not as a, hey, this is a good idea. It started as, hey, we need this as a trade. Can you list something that would work for us? And the SIBO actually worked with Goldman to, change the original calculation of the VIX, create something that was pretty similar to how you might hedge a variance swap off and put something in that Goldman wanted to trade almost day one. And that's really what's been the difference maker for the VIX. If customers, if exchanges want a successful product, what they need to do is have a customer that says, I want this, and then list it, not tell the customers what they want. And that's why we look at IV30. That is really where VIX came from and why we look at that as a product in a whole. So that would be kind of why that's our main point of concentration.
There you go. Well said. Now we have to keep on rolling into our final segment, the most difficult, the most dangerous segment of them all, listeners. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, you know what time it is. Time for the crystal ball. And I'm starting to feel shades of the once and future Dr. VIX on here. When he was on here a few years back and just week after week, he kept buying upside in VIX, and it didn't work out for him too well out there. And, I started off this year really good, a bunch of bullseyes, and then all this madness happened. And I've been leaning on a little bit of upside kind of ever since. And so far, at least, it's worked out until it hasn't. This week is another one of those latter portion of the equation there. I was at a 31.26. Mr. Meatball was at a 28.28, and our old buddy Mr. Matt from Orats was at a 26.1, which looks pretty prescient in hindsight. VIX actually is almost exactly there. It's at about almost a 26 even right now. So I'll be nice. It's got to be within a 0.1, but these are crazy times. So I'll give Mr. Matt a bit of a bullseye. Spike's not so much. Spike's a rare discount to VIX out there in Spike's light. I just chatted with Simon Ho earlier this week on our Crypto Rundown show. I'll have to ask him why we're seeing spikes at such a weird discount to VIX right now. It's not a usual scenario. Usually it's the other way, and when that dividend gets in there and SPY gets even heftier. I haven't really seen it at this much of a discount to VIX in quite some time, which makes me want to scratch my chin and say, So spikes, he's off about a point. It's about 25. But in VIX land, I'll give it to him. So congratulations, the Oracle of New Hampshire out there. You win. You know what that means, Dave? That's a lucky turn for you as well. Because when the guest wins, the guest on this week's show gets to join in the celebration. So you get to go first, Dave. A dubious honor. What are you feeling for this time next week from an overall volatility perspective, sir?
So I know it's not really an honor to go first, but I will take it anyway. And I'm going to continue with my viewpoint and say up. I'm going to go to 27.
All right, 27. I like that. So my view is that we're going to see more of the same of what we saw this week. I think that, we are toward entering a new vol regime where, 30 had been kind of our center point, and maybe we're heading more toward 25 being our target. And so I like us to hang around here, maybe a little lower, and I'm going to say 25. All right. And let's see, since we don't have Mark, we'll have our robotic VIX guessing machine guess for him, and his guess is 58. His guess is
that's probably what he would have said. Yeah, that sounds good. Yeah, that's probably what he would have said.
58. That is exactly what I would have said out there. Exactly what I would have said. I think I'll go in lieu of a 58. I will go for a more rational, a more reasonable out here. Let's go for Dave. Hit a nice 27. I was feeling a little bit. I'm going to go 28.35 out here for next week. So that's our market for this time next week, listeners. We've got Mr. Meatball playing the downside, 25.25. Dave in the middle, Goldilocks there at 27, and me feeling a little bit of upside, go figure, 28.35. All right, that's going to do it for this episode of Volatility Views. But before we go, let's go back around the horn. Let's start with each of our cohorts. Let's start with our guest. Give him a little bit of pride of place. Mr. Dave, if folks want to check out the VIX Crush Show, or perhaps the forthcoming VIX Scoop Show, where should they go? What should they do, sir?
That's pretty scary Beetle the other day. So, yeah, you can find me on Twitter or on YouTube.
All right. Well, make sure you go check it out. It's a great show. We've had Andrew on before, and I think I did a show with you as well. So you can go check those out in the archives. And, if you're looking for me, just go to @OptionPit on Twitter and go to our website. I put out volatility content every day. So go subscribe to our email list, and you get all sorts of awesome free content. And then lastly, I believe we have the long and short of futures options coming up next in about half an hour. Mark will be with you then, and I will be with you next week. And I don't know who our guest is next week, but if it's not you, Dave, I wish you the best of luck. I wish our listeners the best of luck. Have a wonderful weekend, and we'll talk to you next time on Volatility Views.
Volatility Views.
All right, bye.
An impressive impression there. Of course, unfortunately, long and short of futures options hasn't been on in quite some time. That one has become TWIFO, which is on Thursdays, of course. But listeners, you guys, as always, can check out all that good stuff and a lot more on the old network or via the Mixler. Of course, got to check out our friends over there in MIAX as well. MIAXoptions.com/spikes is the place to go to get all that info on spikes. If you want to know what's going on with why is it lower than VIX right now, interesting question. MIAXoptions.com/spikes is the place to go to begin your journey. And on behalf of the Greasy Meatball and Mr. Dave of VIX Scoop fame and our friends in MIAX and indeed myself, thank all of you for downloading, streaming, and listening. We'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.